Taken this exercise from our notebook for term 2, but you can also find it. Sorry, I'm just looking for my pen. You can also find it on testpapers.co.za if you don't have this booklet by hand. So please, or at hand, sorry, there we go. I'm back. Okay, at hand. Right. So I'm going to do the SOCI for the financial year ended 28 Feb 2024. And then we have a whole bunch of information there. So as you know, when it comes to SOCI, I prefer starting with the information that has been provided in my pre-adjustment trial balance. And then once I'm done using that, I then go to my adjustments. But you don't have to do it that way. You can start however you want to. So for now, we have sales over here. So I'm going to go and include my sales there. Okay, they've already done that, so I don't even have to do that. Cost of sales has a question mark, so we will still get to that. Rent income is under your other operating income. So rent income. And they are saying that at this moment, it is 143,750. So I will just add that. 143,750. That's what we have currently. Then we also have commission income. So commission income, that's another other operating income. Oh, you can't see. Commission income. This is just to ensure that I don't miss anything. And that was 22,480. Okay, there we go. Next up, so now I have that. There's a question mark, and I have that. Next up, I have my commission income and discount received. So discount received, that is another operating income. So discount received over here. Discount received. And the amount there, I'm just going to write the amount as is, 7,270. So I have that in my SOCI now as well. Okay, then next up we have our interest on fixed deposit. So interest on fixed deposit of 8,500. That goes with my interest income. So interest income over there, and they are saying 8,500. So I'll just include that for now. Then I have salaries and wages. So those are expenses. So I shall go to my operating expenses, and I'll say that I have salaries and wages. And I'm just going to add the amount as per my SOCI. My trial balance there, 105,600. Okay. Then we have consumable stores and insurance. So those are also expenses. Consumable stores, and that was 11,900. And then our insurance, let me just double check. Yes, 11,900. Our insurance is 19,300. Insurance 19,300. There we go. And then sundry expenses has a question mark for now. So sundry expenses, we don't know. So we'll just add it as such. And then we also have bad debts, but that has already been included in the answer book. And then there's a random trading stock deficit there as well. Okay, so now we have all of our nominal accounts within our SOCI. And remember, we are working with the pre-adjustment trial balance. So they're saying that these were the figures before the following adjustments and information. The table looks terrible already. Okay, there we go. Too much writing going on here. Then says that the credit note of damaged goods worth 5,375 at a cost of 2,500 was not recorded. In other words, you have included in your sales an amount of goods that was purchased from you, but then returned. Therefore, debtors' allowances, and you have not yet recorded that. So this is not your final sales figure because you must still remove a credit note that you issued to a debtor. Okay, so debtors' allowances there. Are we good with that one? We're happy. So then the other thing that I always do when I see any transaction with stock is I always have another calculation going on here. So trading stock currently says, that according to the trial balance, I have 122,500. So this is my pre-adjustment trial balance figure. And now I said, okay, but I forgot to record that damaged goods that were returned to me, that this has not yet been recorded. So I must remember to now add back the 2,500 to my trading stock, as well as my cost of sales must be subtracted because I no longer have that cost of sales. So I'm just going to say that again. It is a credit note that was issued that you have not yet recorded, which means that you no longer have that sale. It is now debtor's allowances. The debtor returned the stock to you, so you have that stock back. It is no longer a cost of sales expense, so subtracted. Okay, then it says that a physical stock take revealed that stock with a cost price of 4,200 was missing, and consumable stores on hand amounted to 3,100. So in other words, they are telling you that you had a trading stock deficit of 4,200. Okay, so the physical stock count revealed that stock with a cost of 4,200 was missing. That means you have a deficit. Okay, then says that and consumable stores on hand amounted to 3,100. So consumable stores not yet used, 3,100. Then according to them, the trading stock deficit, so the deficit there, according to them, was 4,200. Okay, so for now, I'm just going to leave that one there because I want to see if there's anything else on trading stock, because I now know that they said my trading stock was 122,500, but now they are telling me that it's actually only 4,200. So I'm just going to hold on to it for now. I'm going to make a note here to indicate that I'm not done yet. I just want to see if there isn't perhaps anything else. Okay. Then it says that the bookkeeper left out a discount of 230 Rand from Angel Traders, a creditor. This was for early payment of the account. In other words, we received 230 Rand in discount that our bookkeeper didn't record. It was left out, so omitted. So we must go to our discount received and we must add 230 Rand for our discount received. Okay. Then it says that debtors with arrears amounting to 3,000 Rand must be written off. So we have debtors accounts that are in arrears, and this must be written off as a bad debt. Therefore, the debtor no longer owes you the 300, and you must go to bad debts, and you must add the, not 300, but 3,000. Okay, there we go. That one is done. So we have now 1, we have 2. Now I'm lying. We're not done with 2 because that's the stock one. We are, however, done with 3 and we are done with 4. So next up, number 5. Provision for bad debts must be adjusted to 4% of debtors. So in other words, you now need your debtors balance. So your debtors control. So we are going to start with the debtors control as per the trial balance. And that is, we go here, debtors control, 70,000 Rand. So we're going to use that 70,000 Rand now. That's our opening balance. However, they then said that there was that credit note for goods that were damaged. Therefore, the debtor no longer owes us 5,375 because the debtor returned the goods. Then we also had a debtor that was written off 3,000 Rand. So we also no longer have this debtor. So that brings us to a new debtors balance of 70,000 minus 5,375 minus 3. So 61,625. And they are saying that of these debtors, we do not expect 4% of those to make payment. So we must calculate what is 4% of these debtors. So times 0.04. And that's 2,465. So they are saying that this is the amount that you do not think you will actually receive from your debtors. But you must now make a provision for whatever you feel you might not receive. And if you go to your trial balance, you will see that last year you already made a provision of 2,010 Rand. But now this year you are expecting that to increase a little bit. So you will no longer have the 2010 provision for bad debts. Wait, let me write it here. No longer the 2010. You must get that 2010 to 2,465 by finding the difference there. And that is 455. That you must now increase your provision by. So the more that you are providing for bad debts, providing for bad things happening, providing for expenses, the more your expenses will increase. So you now have a provision for bad debts adjustment. And the adjustment is just the movement from your prior year to your current year's provision. Just your movement from your prior to your current year. So this over here is the amount that you will see in your SFP note for your trade and other receivables, but in your SOCI, only interested in the movement. Okay, so that's provision for bad debts adjustment done. Next up, it says that insurance of 9,300 was fully recorded. The amount was paid for the period of 1 Jan 2024 until 30 June 2024. Your financial year ended 29 Feb 2024. So in other words, if you paid for the period of 1 Jan 2024 up until the 30th of June 2024, you have made a prepaid expense for a few months. And they are saying the total that you paid was 9,300 for this period. However, your financial year ended on the 28th of Feb. So in your current financial year, you paid for Jan and Feb. Anything beyond that is a prepaid expense. So in other words, March, April, May, and June, 4 months that you had a prepayment. So you must now calculate what is 4 out of the 6 months that I've paid for, because I need to see what is that prepayment that I made. And that is 6,200. So it's the total paid times 4, because I want to know the 4 months prepaid out of the 6 months paid in total. So 6,200 that I paid in advance for my insurance. I know that if I'm looking at my SOCI insurance, I'm reporting on a 1-year period. So I'm reporting on the expenses for 1 year. I may not include anything that is for another financial year. Therefore, my insurance wasn't 19,300 because 6,200 Rand thereof was a prepaid expense. So it needs to be removed. It will be included in the financial statements in the next financial year. Okay, so that is then your insurance also done. Then it says there that rent income was increased by 10% on the 1st of September 2023. The rent for Feb has not been received. So if we're looking at what they're saying here, they're saying that we rent out space. This is our financial year. Our financial year started on the 1st of March 2023, and it ended on the 28th of Feb 2024. But they are saying that the rent for Feb has not been received. So in other words, you are only showing in your books the rent for 11 months. In other words, you must go and find out what is my monthly rent that I was supposed to then receive, because I need to go and include that as an accrued income, because I am reporting on a 12-month period, but currently I'm only showing 11 months. So how am I going to find that amount? It says that you received your rent. You received rent up until the 31st of August before your rent increased by 10% on the 1st of September. So for the first few months, that is March, April, May, June, July, August. So for the first 6 months, you received an amount of X. You don't know what that amount is. Okay? Then for the remaining 11 months, because you haven't yet received Feb, so for the remaining 11 months, you then received not 100%. So I want to write this here real quick. So it's 100% of X is what you received previously. So because you wanted 100% of your monthly rent. So therefore, you could have also said just 1X, because 100% of an amount is 1 times that amount. But now you're saying that for the remaining period, so the remaining 5 months, because September, October, November, December, Jan, only up until Jan, haven't yet received Feb. So for the remaining 5 months, we received the 10% increase. So we didn't receive 1X, we received 1,1 times X. Why am I saying that? Because I'm saying it's 100% plus 10% is equal to 110%. And here we are at the 100%. Okay? Then that means that 100% is 1X. Therefore, 110% is 1,1X. Okay, so that is what I received. And all of that added up to the amount that I currently have for my rent income. And I now need to use this to find my monthly rent in order for me to see how much I must include as my accrued income. So you're going to say here that you have your 6X plus your 5,5x, because 6 times 1 is 6, so 6x. 5 times 1,1 is 5,5x. All of that added up to the rent income as per your pre-adjustment trial balance 143,750. And then you just solve for x. So it's your 143,750 divided by 11.5. So X is 12,500. But remember that X is the amount prior to the increase. You want to receive the increased amount. So you must take your 12,500 times 1.1. Okay, so another way of doing it, so 12,500. I want the increased amount. I'm working with the original amount. So 13,750. This is what you are missing here, that you now need to go and add to your rent income in order for you to show your full 12 months for the rent income received. And that is it for rent income. Almost done. The bookkeeper recorded 80,500 as additional fixed deposit on the 1st of October 2023. So, in other words, you had a certain amount for your fixed deposit on day one of your financial year, and then it changed on the 1st of October. So, on the 1st of March 2023, you had X amount. And then you increase that on the 1st of October. The reason why they are telling you that is because you must calculate your interest on fixed deposit. So the bookkeeper has now recorded, because it says the bookkeeper recorded 80,500 already. That means included in your fixed deposit of 180,000, that's what you ended on. So included in that is your 80,500 increase. So you ended on 180,000, but you started on 180,000, 80 minus the 80,500 that you now added. So you started on 99,500. Then they're saying that your fixed deposit earns interest at 12% per annum. So these amounts earn interest at 12% per annum. But remember, you didn't have these amounts for the full financial year. Therefore, you must go and calculate for how long you had each one of these amounts as your fixed deposit. And for the first one, it was March, April, May, June, July, August, and then September as well, because your increase was only on the 1st of October. So March, April, May, June, July, August, September. Okay, so for 7 months, so times 7 over 12, you had the first one, then October, November, December, Jan, Feb. For 5 months, you had the increased amount. So then we just calculate that. Times 12% times 7 over 12. That is 6,965. And then 180,000 times 12% times 5 divided by 12 is 9,000. Okay, so in total, you should have received 15,965 Rand. If we're looking at what we have in our interest income for now, it's only 18,500. So we have an accrued income here of 15,000, a total interest income of 15,965. The accrued amount is that total minus what we've already received. So we had to still account for, add on, 7,465 that we didn't show in our books up to date. Okay, so you want to show the total that you should have received. Then second last one, last one, says that the loan statement is as follows. So you have a balance, you have repayment including interest, and then you have a balance at year end. So if I take my balance at the beginning of the year, right, minus my repayments, then I thought that I owed them 220,000 Rand. But they are saying that your balance at year end is 184,500. So let's look at what the loan statement says here. Just quickly. Front page. Okay. Right. So it says here that your loan balance is 184,500. That is actually exactly the same as what you have here. Okay, so your books agree to what the statement says you have. So you must now find the interest. So if you had 385,000 Rand and on that balance at the beginning of the year, and then you say minus your 184,500 to see your total repayments according to them. Total repayments. That is your total repayments that you made. They are saying here that the repayment of the loan was 165,000. So there's a difference here, and that difference is then your interest expense. So interest expense. The difference is actually 20,500. They said your repayments was 165. So that means the difference 35,500 negative entry there because, oh, sorry, you can't see. Negative entry there because it is an expense decreasing our profits. And then the last one there says that, please note, operating expenses amount to 28% of the adjusted sales. So in other words, remember there was a question mark with your sundry expenses. So you must take your sales figure, 135, minus that debtors allowances. So you must take your sales figure and then you must calculate your operating expenses. So operating expenses is equal to 20% of sales. So you take your sales times 0.28 times 28%. And that then gives you your operating expenses. Okay, in brackets. And then when you find all of your figures here, 600, then 11,900. Minus that. So for here you have 8,800, then 19,300 minus 6,200. There we have 13,100. Then for bad debts, we are on 7,120. And now we can do this trading stock deficit one because now we can say for sure that there was nothing else. It was just the 4,200 stock that we were missing at year end. However, we must remember that the 4,200 was counted, but this was counted before we took into account the 2,500 Rand returned from one of our debtors. Therefore, our trading stock deficit is definitely not the 122,500. Cannot be, because then we saw that we also had 2,500 in trading stock that was returned. So the total trading stock that we had or should have had is 125. Okay? They said here that you have a deficit of 4,200, but once again, before taking into account that there was actually more stock returned. Therefore, you don't only have a 4,200 deficit, your deficit is now 6,700. It's more because you haven't yet recorded the fact that more goods were returned, so your trial balance differs even more compared to what you physically counted. And that was it for your expenses. There was nothing else there. So now find the difference between your total operating expenses and what you have for your operating expenses as listed there. 13,100 minus 67 minus 45. So there you have your sundry expenses. Is a very big amount there. Okay, so there we go. I just took my total operating expenses minus all the expenses that I do have to find that missing figure. Then we can also add all of our other operating incomes there. And that is 157,500. We didn't change the commission. And then 7270 plus 2, 230. So 7,500. Then I'm just going to add all of these incomes to find my total other operating income. There we go. Then when we're looking at our cost of sales, let's see if they give us any information. It says the following is for the financial year ended. Sales including a 50% markup. So in other words, you had a 50% markup on your cost of sales. So take your sales figure that you had initially times I want the cost. I'm working with the selling price. So 1350050 times 100 divided by 150 to get your cost. Let me just quickly 050 times 100 by 150. Okay, so that gives me, I'm just going to quickly write that down here and then I will explain. Let me just not get confused with what I'm writing. Okay, so that gives me this amount. Why does it give me that amount? Because I didn't use my net sales. Okay, because remember I had the return from the debtor. So, sorry, that was planned. You know me, I do those things. So, just for you to see, there you go with your decimal, because you had to use your total sales. So, 1344675 times what I want divided by what I have. There we go. There we have our cost of sales as 896,450. Okay, so you're using your net sales to then calculate your cost of sales. Minus 1344675. Oh, let me just show you what I'm doing. So I'm taking my sales minus my cost of sales to find my gross profit. Okay, so gross profit plus other operating income minus my operating expenses is equal to my profit before interest, so my operating profit. Add to that my interest income to get to my profit before interest expense. Minus my interest expense to get to my net profit for the year. And then the last thing that I just haven't done yet is my gross operating income, my gross profit plus my other operating income, 635,705. And that is it. That is a SOCI.